Good morning, everyone. Welcome to the Withholding Tax Basics webinar. Before we begin, I would like to address some housekeeping items. When you entered into the webinar, you were automatically muted. We do ask that you remain muted throughout the duration of the presentation. You will communicate your questions throughout the webinar with the host, utilizing the chat. Feel free to submit any questions you may have. Please be aware that some questions may require additional information, so you may be directed to contact the department. At the conclusion of the webinar, you will be asked to complete a 3-minute survey. Please take time to share your feedback with us. We truly appreciate it. At this time, I would like to introduce myself. My name is Jonetta Appling. I am a Revenue Administrative Officer in the Knowledge Education and Outreach Division here at the North Carolina Department of Revenue. Accompanying me today is the host. Courtney, would you like to introduce yourself, please?
Hello, everyone. My name is Courtney Curtis, and I will be your host for the webinar today. I am currently the training coordinator with the Knowledge Education Outreach Division here at the Department of Revenue, and I've been with the agency for 11 and a half years. I greatly welcome you all today, and back to you, Janetta.
Thank you, Courtney. To ensure the best audio quality for today's presentation, my host and I will now be turning off our cameras. This is an overview of the withholding tax schedule that businesses must navigate to comply with their tax obligations for the state of North Carolina. If you would like more information on any other tax schedule, there are other webinars that focus specifically on sales and use tax, individual income, and other tax schedules. We encourage you to contact the department's customer service number or visit the website for specific questions. Next, I would like to share our disclaimer with you. This presentation is for general information only. The presentation's content should not be interpreted as specific tax advice for a specific tax situation. The presentation does not take into consideration draft or future legislation. All right, let us utilize the chat and answer a couple of questions. This will give you practice with using the chat. Do you have employees? If so, have you registered for a withholding tax account? Again, just drop those answers in the chat. And Courtney, when you receive answers, please share them with us.
All right, we started getting some answers in the chat. For the first one, do you have employees? I'm showing that the majority of people in the chat are saying yes, they do. And then as far as have they registered for withholding tax account, yes, yet I'm showing it's a mixed crowd. Some are saying yes, some are saying no.
Okay, great. Well, with the answers that have been shared, the information that we're going to share with you today is going to be right on time, and you will be able to have some great takeaways from this webinar. The topics for discussion for today will be an overview of withholding taxes, payments exempt from withholding, withholding tax accounts and employee forms. We will discuss employee withholding allowance certificates. We will also discuss filing and paying withholding tax options. We will look at the annual withholding requirements, and we will also discuss additional information and resources. Before we dive into the topics we're going to discuss today, I want to share a few resources with you. The first is the resource guide. The resource guide has been made available on the department's website. It does list links to resources that I will discuss throughout the webinar today. Also, many of the forms we will discuss can be found on this document as well. These resources will assist you with your compliance efforts in relation to your withholding obligations to the Department of Revenue. The host at this time has placed the link for the resource guide in the chat for your convenience. One specific item that is linked in the resource guide is the NC30. The NC30 is a departmental resource that is posted on the NCDOR website. This tax booklet contains instructions for employers regarding what types of income are subject to withholding, withholding tables, and filing deadlines. The NC30 also includes revised withholding tables and alternative methods of calculating the amount of tax for the year and are broken down by filing status, pay period, amount of pay, and number of allowances claimed. Does anyone have any additional questions that need to be addressed before we proceed to the next section of the presentation?
Yes, we did get someone in the chat that asked, does the department send out copies of the NC30 booklet?
No, we do not. You can go on our website and download a copy or a copy to be mailed to you via our website or call us at 1-877-252-3052 and we can order a copy to be sent to you. Now that we have outlined the scope of the discussion of the presentation for today, let us begin with the first area of discussion, withholding tax essentials. When understanding the concept of withholding, we may ask ourselves, why do we withhold? Funds collected provide a portion of the state's operating budget and utilized to support and maintain our state highways, health and human services, public safety, schools, and other funded resources. Withholding tax is considered a trust tax because the money is held in trust for the state, and these funds should not be used for a business's personal use. One of the first things you as a business owner should determine in reference to withholding is how you should properly classify your workers. If your business is unsure of how to make the determination, review the IRS website to assist in the determination of worker status. The IRS has published 3 categories of evidence to assist you in the determination. If you are still unclear upon review of the categories, the IRS has forms SS8, Determination of Worker Status for Purposes of Federal Employment Taxes and Income Tax Withholding that can be used to assist you. This will help you as an employer understand if you should classify someone as an independent contractor or an employee. Please note, the employer or potential. If your business contracts out labor from non-resident performance contractors or a contractor with an ITIN, then the following information applies. Business organizations or individuals in North Carolina that pay more than $1,500 per year to a non-resident performance contractor or a contractor with an ITIN must withhold 4% of that pay. A non-resident performance contractor is a non-resident individual who performs or a non-resident entity that provides for the performance in North Carolina for compensation other than wages, any personal services in connection with a performance, an entertainment or athletic event, a speech, or the creation of a film, radio, or television program. The ITIN's, Individual Taxpayer Identification Number, are issued by the Internal Revenue Service to people who are not eligible to receive a Social Security number. If a payer is required to complete a 1099 miscellaneous or a 1099 NEC to report the non-wage compensation paid to a payee, then the NC 1099-M does not have to be completed. Once you have decided to hire an employee, there are steps to take to comply with your withholding responsibilities as an employer. You must apply for North Carolina Withholding Tax ID, have an employee fill out the NC4 forms, file and pay withholding tax returns using the NC5 form when due. At the end of the year, issue W-2s to employees, and finally, file the NC3 and required W-2 and 1099 statements. If it is determined you have employees that are subject to withholding, an employer shall deduct and withhold from the wages of each employee the state employee income taxes payable by the employee on the wages. At the end of the year, the amount of withholding is applied to the employee's individual income tax liability for the year. The withholding tax rate on wages is set at 0.1% higher than individual income tax rate. For 2024, employers must withhold from wages at a rate of 4.60%, since the individual income tax rate is set at 4.50%. Now, let's look at the treatment of residents and non-residents. Please know that this information is for withholding tax purposes specifically and does not answer the need to file for income tax purposes. This information can be found on page 4 of the NC30. Resident employees is an employee who is a resident of this state and is subject to North Carolina withholding on all of his or her wages, whether he or she works within or outside the state. Except that, to prevent double withholding and to anticipate any allowable tax credit, North Carolina withholding is not required from wages paid to a resident for services performed in another state, if that state requires the employer to withhold. Withholding does not relieve the employee of the obligation to file a North Carolina individual income tax return and pay any balance due after tax credits. Non-resident employees are subject to North Carolina withholding on any part of his or her wages paid for performing services in this state. Any relief from double withholding must be granted by the employee's state of residence. See Section 7 of the NC30 for information on withholding from non-residents who receive non-wage compensation for personal services performed in North Carolina. Now, let us do a question and answer scenario. This will help us further understand residency in the state of North Carolina. Sam Young works in South Carolina, but is a resident of North Carolina. The Myrtle Beach Umbrella Company is the employer, and they are required to withhold South Carolina state taxes. Is the employer also required to withhold North Carolina state taxes? The answer to that is, in order to prevent double taxation and to anticipate any allowable tax credit, North Carolina withholding is not required from wages paid to a resident for services performed in another state if that state requires the employer to withhold. Let's continue with our scenarios to assist with our understanding of residency. Amy Rich works full-time as a remote teleworker in Virginia and is a resident of Virginia. Her employer, Tie-Dye Incorporated, is located in North Carolina. Is the employer required to withhold North Carolina state taxes? The answer is, if the employee is not physically performing services in North Carolina and not a North Carolina resident, then the employer is not required to withhold North Carolina state taxes. The requirement is not based on where the employer is located. Now, let us check our knowledge. Income tax withholding is part of an employer's wage or salary withheld and remitted to the North Carolina Department of Revenue by the employee in payment of taxes. Answer true or false. And again, put your answers in the chat. Courtney, when you get your answers in, please share those with us.
All right, so we got some answers in the chat, and it looks like the majority are saying B, false.
They are correct. Great job. And the reason why false is the answer here is employees do not remit payments to the Department of Revenue. That is the responsibility of the employer. There are different actions that need to take place for individuals classified as an employee or self-employed. If paid as an employee, the employer must withhold at a rate of 4.35% or use one of the alternative methods for calculating withholding tax. If self-employed, you should make estimated income tax payments via Form NC40, the individual estimated income tax, if their income meets the minimum requirements for filing. This can be found in Form D401, Individual Income Tax Instructions. Pensions and annuity withholding tax rates are as follows. Non-periodic distribution payments, that means that is no established frequency. 4% of the distribution payment must be withheld if that is the case. Periodic payments, that means regular payment frequency. You're going to withhold at the same rate as regular wages, which is going to be 4.35%. The recipient must complete Form NC4P, Withholding Allowance Certificate for Pension or Annuity Payments, or withhold as if the recipient were single with zero allowance using the wage and tax bracket tables. Now, there are some types of pension payments that are exceptions to withholding, and they are a pension payment that is wages, retirement benefits received from North Carolina state and local government, retirement systems, and federal retirement systems identified under the Bailey-Emory-Patton settlement paid to retirees who were vested as of August 12th of 1989. Now let us take a look at payments that are exempt from withholding tax. This information can be found on page 9 of the NC30. Ordained or licensed member of the clergy, they may have voluntary agreement to have tax withheld by their employer. Now, Indian reservation income, it must be an enrolled member of a federally recognized Indian tribe, and income is derived from activities on a federally recognized Indian reservation while the member resides on the reservation. Now, for income tax treaty agreements, these wages of non-resident alien individual or foreign corporation are exempt from U.S. income tax under an income tax treaty are generally exempt from withholding. Now, for domestic employees, these are your housekeepers, maids, nannies, etc. Employers are not required, but the employee may enter into a voluntary agreement to have the employer withhold tax. Now, for Seaman Vessel Worker Tax Fairness Act, this prohibits withholding state income tax from wages of a seaman on a vessel engaged in foreign, coastwide, intercoastal, or interstate trade, or an individual employed on a fishing vessel or fish processing vessel. Now, the last one is the Service Member Civil Relief Act. This act allows the spouse of a service member to elect to use the same state of residence as the service member for state tax purposes. The act prohibits North Carolina from taxing the income earned for services performed in North Carolina by the spouse of a service member if 1. The service member is present in North Carolina serving in compliance with military orders. 2. The service member's spouse is in North Carolina solely to be with the service member. And 3. The active duty service member maintains legal residence in a state other than North Carolina, and the service member's spouse elects that same state as their state of legal residence. Now, let us discuss estimated individual income tax. Estimated income tax is required if your tax liability will be $1,000 or more after withholding and credits to avoid owing interest on the underpayment of estimated tax. There are individuals who must pay in estimated tax, and one of them is your self-employed individuals. If their income meets the filing requirement for filing taxes, then it would be a great idea for them to file and pay estimated income taxes on their wages. There are a few more examples of individuals that may have the requirement to make estimated income tax payments, and these are your individuals receiving income from partnerships or S corporations, pension payment recipients, and anyone receiving payments from tax deferred accounts. Individuals use the NC40 form to report their personal estimated income tax payments to the state of North Carolina, and also some business owners would do the same. This is very common in the gig economy. An example of the gig economy type of work would be if I have a rideshare business where no withholding tax is coming out. So I may need to make estimated income tax payments on that income. The due dates for the NC40 payment is April 15th, June 15th, September 15th, and January 15th. These are the quarterly due dates for your estimated payments. But there are a few limited exceptions to the quarterly due dates, for example, for farmers. But more specific guidance on this can be found in the instruction section of the NC40 form. The instructions also have a computation worksheet to help you determine if you have the requirement to make an estimated income tax payment, and if so, it will also help you calculate the payment amount that should be paid. We recommend using the electronic filing and paying option on our website to pay in your estimated tax payment. This is a process that is clean and clear and will minimize mistakes when reporting that information. Now, let us check your knowledge. Which of the following groups are not subject to withholding? A, domestic employees, qualified military spouses, and ordained or licensed member of the clergy. B, seaman vessel workers, Indian reservation income earners, and fast food workers. C, qualified military spouses, gas station attendants, and military personnel. Courtney, when you get enough answers in the chat, please share those with us.
All right. So I'm showing that the majority are saying A in the chat.
And that is correct. Great job. Now we're going to talk about withholding tax accounts and employee forms. Now let us look at preparing to register your business. Once it is determined that you are engaged in business, you must register with the Department of Revenue. Before completing the North Carolina registration application, we encourage you to review the information under the Prepare to Register link on the Register a Business page on our website. This page provides information needed to complete the registration application to obtain your account ID numbers, including the following: business ownership, business contact information, business partner or responsible person's information if applicable, withholding tax information, and sales and use tax information. We will discuss the information needed for withholding within this presentation. There is also a video, and it also gives you a short overview of the processes that you go through in order for business registration. Next, we're going to look at business registration. When an employer determines they will begin paying wages, non-wage compensation, or pension payments, the employer should complete our business registration application form NCDOR, which is the same form that was discussed on the previous slide. We strongly encourage you to utilize our online application of this form. This way, you are able to get your withholding tax ID number expediently. If you need to register for both sales and use tax account ID as well as withholding, they can be requested on the same form. If you later need an account ID, you may submit the application at that time. If your business needs to close an active withholding account number, please make sure that you call the department or complete our online NCBN out of business form. Please note, do not stop filing without properly placing your account in active. Otherwise, an assessment of non-filed tax returns could take place. Now that we know how to register for a withholding tax account ID number, let's take a closer look at one of the questions that is on the NCBR, the filing frequencies. Quarterly filing frequency is when an employer who withholds an average of less than $250 of North Carolina income tax per month. If this is the case, the return and payments are due on or before the last day of the month following the quarter end. Those months are April, July, October, and January. If you are classified as a monthly filer, the monthly filing frequency is when an employer withholds an average of at least $250, but less than $2,000 of North Carolina income tax per month. They must file a monthly withholding return. The report and payments are due by the 15th day of the following month, with the exception of December. That one is due in January on the 31st. A semi-weekly filing frequency is when an employer withholds at least $2,000 per month or more in employee wages. Reports and payments are due the same as the federal date. If payroll is made on Saturday, Sunday, Monday, or Tuesday, it is due the following Friday of the same week. If payroll is made on Wednesday, Thursday, or Friday, it is due the following Wednesday. If the due date falls on the weekend or holiday for any of the aforementioned filing frequencies, it is considered timely filed if filed on or before the next business day for all of the filing frequencies. A registered taxpayer should not adjust their filing frequency. Once a filing frequency is selected on the initial business registration application, the department will review and notify you if a change applies to your frequency election. For example, if a taxpayer originally registered and selected the quarterly filing frequency and then later realized that more employees would be hired, as a result, the amount of withholding would change to reflect the range of a monthly filer. The employer should not switch the filing frequency status on their own. The employer would wait for the department to notify them of a filing frequency change and when the change would be effective. Now, let us check your knowledge again. What are the three filing frequencies? A, quarterly filing, weekly filing, and annual filing frequencies. B, quarterly filing, monthly filing, and semi-weekly filing frequencies. And C, monthly filing, quarterly filing, and annual filing frequencies. Courtney, when you get your answers in the chat, please share them with us.
All right. So it looks like in the chat they are saying B, quarterly, monthly, and semi-weekly.
They are correct. The correct answer is quarterly filing, monthly filing, and semi-weekly filing frequencies. Courtney, does anyone have any additional questions that need to be addressed before we proceed to the next section?
Yes, we do. Give me 1 second. Alrighty, so this person asked, how long should it take for me to receive my account ID if I register online?
You may receive your account number immediately. If not, you will receive it within 10 business days. The only exception is if you are requesting to have a seasonal withholding account established. In that case, your account number will be sent via the mail. Now that we have discussed the processes of withholding, additionally, let's look at the employee withholding allowance certificate. Once an employer has applied for a withholding account ID, the next step in the process is to hire the employee. When the employee is hired, the employee will need to complete a NC4 form. Each employee that you hire should be provided with an NC withholding allowance certificate. The federal form W-4 is not acceptable. This form is given to the employee by the employer and advises the employer how many allowances the employee has for tax purposes. If the employee does not give the employer a signed copy of one of the completed NC4 forms, The employer will withhold as if the employee is single with zero withholding allowances. Employers should utilize the information from your employee's NC4 and the information from the NC30 to calculate the withholding amounts. On the next slides, we will review the NC4EZ form and the NC4 form. The NC4EZ is a single worksheet. This form is used if you plan to claim North Carolina standard deduction, North Carolina child deduction amount, but no other North Carolina deduction, do not plan to claim North Carolina tax credits, or if you qualify to claim exempt status. Your personal information must be entered in, as well as your filing status, and your number of allowances and calculation exemption is considered when you are completing this form. You must also make sure that you sign and date this document. The worksheet for the NC4, this will help determine the withholding allowances based on federal and state adjustments to gross income, including the North Carolina child deduction amount, the North Carolina itemized deductions, and the North Carolina tax credits. There is a video that can be found on our website to assist you with filling out this form. The NC4 has multiple worksheets that are used to complete the form. These worksheets determine withholding allowances and include a taxpayer's filing status, itemizations, adjustments to income, and tax credits. If the employee has 2 or more jobs, the employee should use the NC4 to calculate. Form NC4NRA, this is for our non-resident aliens. If you are a non-resident alien, you must complete Form NC4NRA. In general, a non-resident alien is an alien who is not a U.S. citizen, who has not passed the green card test or the substantial presence test. Generally, a non-resident alien is not eligible for the standard deduction. Line 2 of this form requires the non-resident alien employee to enter an additional amount of income tax to be withheld for each pay period to account for the inclusion of the standard deduction in the wage bracket tables, the percentage and annualized methods as well, when computing the income tax to be withheld. Form NC4P, Withholding Allowance Certificate. This is for pension payment and annuity payments. This is used by recipients of pension payments who is a North Carolina resident to report the correct filing status, number of allowances, and any additional amount the recipient wants to withhold from the pension payments. It may also be used to elect not to have state income tax withheld. Courtney, does anyone have any additional questions that may need to be addressed before we proceed into the next section of the presentation, which will be covering our withholding tax information?
Yes, we did have someone in the chat that asked, what should I do if my employee does not return the withholding allowance certificate?
You must withhold tax as if the employee is single with zero withholding allowance.
Thank you.
Okay, moving right along, let's take a look at filing and paying withholding tax. Since the amount of tax withheld from employees' wages is determined based on their withholding allowance certificate and withheld from each pay period, you as the employer are ready to remit the tax withheld back to the state of North Carolina. The way in which you should remit the withholding back to the department depends on your withholding filing frequency. If your business is a monthly or quarterly filer, you will complete Form NC5. If your business is semi-weekly filer, you will complete Form NC5P. To file this form, we encourage you to use or utilize the online filing and payment application. However, you may complete a paper form. We encourage you to utilize the online filing and payment application since you receive automatic confirmation that the tax return was filed. Please note that Form NC5 must be completed if no tax is due for monthly or quarterly withholding tax filers. Now, for semi-weekly filers, Form NC5P only needs to be completed if the tax was withheld for the pay period. But remember, the NC5Q that reconciles the NC5P payment should be filed if there is no tax due. E-Business Center, to use the e-Business Center, this is another method of making payments. You need to register your business with NCDOR and obtain a withholding tax ID. Registering with NCID allows us to better protect your private information. If you make a mistake completing your withholding tax return, it can be amended by completing the NC5X and the NC5PX and mailing the return to the department. The NC5PX is completed when additional withholding tax is to be paid. Any refunds for an overpayment of withholding tax for a semi-weekly filer would be requested utilizing the NC5Q. Okay, let us look at withholding tax forms continued. If you are a semi-weekly filing frequency, you have another responsibility in addition to Form NC5P. As forementioned, please remember the Form NC5P is the payment voucher for applicable payments made for a given quarter for semi-weekly filers. Semi-weekly filers are required to complete Form NC5Q to reconcile the withholding account on a quarterly basis. The NC5Q is the tax return used for semi-weekly filers. The Form NC5Q can be mailed in, hand-delivered to your local office, or electronically filed. We encourage you to use the ENC5Q application, which will file the NC5Q electronically. The form must be completed, again, as forementioned, even if no tax is due for the quarter. Now, this is the NC5Q. To file an amended NC5Q, the employer uses the NC5Q and writes amended across the top. The NC5Q has the same due date as Federal Quarterly Return Form 941. Quarterly and monthly filers should not ever use the form NC5Q. If you find that you have made an error on your tax return that has been previously filed, you should amend your return using the NC5X form for monthly and quarterly filers. The NC5PX is for semi-weekly filers. You only use the NC5PX if you owe additional tax. You're going to use the form NC5Q if you're looking for a refund. As previously mentioned, the e-Business Center is a method to file and remit withholding returns and payments. To use the e-Business Center, you need to register your business with NCDOR and obtain your withholding tax ID as well as an NCID and password. Registering with the NCID allows us to better protect your private information. Now we're going to look at income tax withholding methods, but taxpayers can purchase certain software that will calculate the withholding tax amount required to be withheld or use a payroll company. But you also have access to the different methods that are mentioned in the NC30 booklet. The wage bracket method. Using this method of withholding, you're going to select the table which corresponds with the employee's filing status. That will be married, single, head of household, surviving spouse, as shown on the NC4 or the NC4EZ, and your payroll period, which is classified as weekly, biweekly, semi-monthly, or monthly. Now, if you choose to use the percentage formula method, the percentage method calculates withholding tax based on a specific dollar amount. Taxable income is derived by reducing gross wages by the appropriate deductions. This method works for any number of withholding allowances the employee claims and any wage or compensation amount. An employer would need to use this method if they have any employee who is claiming more than 10 allowances or the wages exceed the amount shown in the wage bracket table. When using the percentage method, the employer would round off the final result of the calculation to the nearest whole dollar amount. Now, when using the annualized wage formula, this is the last method that can be used to compute withholding income tax. This is the method you would use with the calculation being based on a specific dollar amount and the appropriate deductions. Now, to help us further understand the process of the NC5Q, let us look at this taxpayer example. XYZ Enterprise will be filling out its NC5 for the month of January 2025. Oh, wait a minute. Let me clean that up. To further understand the withholding filing process, let us look at this taxpayer example. XYZ Enterprise will be filling out its NC5 for the month of January 2025. The business has one employee whose salary is $2,300 per month. The employee's filing status is married, and the NC4Z, let me back up because I messed it up. To further understand the withholding filing process, let us look at this taxpayer example. XYZ Enterprise will be filling out its NC5 for the month of January 2025. The business has one employee whose salary is $2,300 per month. The employee's filing status is married, and the NC4EZ shows one withholding allowance. The NC30 wage bracket table shows the amount of income tax to be withheld as $45. Now let us further look at the example and use the table to show how to come up with the withholding allowance. Using the monthly payroll period chart from the NC30, The $45 is the place on line 1 of the NC5, and you can either mail or electronically file with the payment on or before February the 15th. Next, let us look at our annual withholding requirements. In addition to the normal quarterly or monthly or semi-weekly filing due dates, employers must pay attention to these other due dates as outlined on page 2 of the NC 30. On January the 31st, an employer must give wage and tax statements such as W-2s and 1099s to employees. Also, the Form 1042S. This is the 1099 for foreign persons that have U.S. source income that is subject to withholding. And as previously stated, all 1099s to individuals. Pension payers give each recipient of the retirement distribution, the 1099-R. All of these documents must be submitted by the employer to the employees or pension payers by January the 31st. Also, January the 31st, employers must file their annual reconciliation. This is the NC3, along with copies of Forms W-2, W-2G, 1099 miscellaneous, 1099-R, 1042S, or Form 1099-M. Last but not least, on February the 16th, an employer starts to withhold taxes from employees who fail to provide a new NC4 or Form NC4EZ who previously claimed exemption from withholding as if he or she is single with zero allowances. For more details concerning these dates, please refer to the NC30 booklet. And these are outlined on page 2. At the end of each year, as we have previously talked about, each taxpayer that has obtained a withholding account ID has the responsibility to reconcile the year electronically by using the ENC3 application. Unless you terminate your business, Form NC3 and the required 1099 statements are due on or before January 31st for the preceding calendar year. The state's copies of Form NC 1099-M, Federal Form 1099 Miscellaneous, or Federal Form 1099 NEC must also be included. If a business does not complete this process, they will incur penalties. Failure to file in the format prescribed by the Secretary, this is $200. Using the ENC3 portal will prevent this penalty. Failure to file an informational return by the due date, it is $50 per day up to a maximum of $1,000. There are tutorials on this specific process that is provided on our website, and it will give you step-by-step guidance so that you are successful in your submission of your NC3 documents electronically. In addition to withholding forms discussed previously in this presentation, there are other forms that should be recognized in the compliance efforts of withholding. In order to notify the department that you no longer need to have a withholding ID, use the NCBN, which is the Out of Business Notification Form. To update an address, use the NCAC, which is the Business Address Correction Form. Both of these forms can be submitted through our website. To report compensation paid to a payee, you're going to use the Form NC 1099-M. Federal forms that have a connection to withholding that we should pay attention to include the 1099 miscellaneous, This is miscellaneous information. 1099 NEC. This is your non-employee compensation. The 1099-R. This is distributions from pensions, annuities, retirement, or profit sharing plans, IRAs, insurance contracts, etc. The 1042-S, this is your foreign person's U.S. source income subject to withholding. The W-2, this is your employee wage and tax statement. And the W-2G, this is your gambling withholding tax statement. Now, I'm going to share with you some additional information and other resources. Activities where people earn income providing on-demand work services is classified as gig economy work. Much of the activity in the gig economy involves temporary, flexible jobs. Individuals are often independent contractors and or freelancers. Some examples of gig work include driving for a rideshare company, making deliveries, or providing a creative service like photography. With the recent rise in temporary part-time jobs with businesses, such as the examples listed, we have received an influx of calls wanting to know if they have to include income earned from gig work as income on their tax return. The answer to this is yes. If you work as an employee and do gig work, you may avoid making estimated tax payments on your gig income by having your employer withhold more state tax from your employee paycheck. If you do choose to increase the amount withheld instead of making estimated tax payments, it is important to make sure the balance due on your North Carolina individual income tax return will be less than $1,000 in order to avoid on interest on the underpayment of estimated taxes. If you do not work as an employee and the income from your gig work is your sole income, then you may have to pay estimated taxes on that income using Form NC40. There are frequently asked questions and video referenced on our website to assist you. We have previously discussed about penalties and interest when you do not file timely. Here are additional actions that can take place. Assessment of additional penalties and interest in the form of a collection fee. Assessment of delinquent periods if you don't file. DOR has the authority to create a tax assessment for you. If you are a corporation or a business other than a sole proprietorship, you could have the transfer of taxes to responsible officers. This is done when a business is closed and has outstanding liability. The liability is transferred to the responsible officer's Social Security number. If they are a sole proprietorship, then the transfer is not needed. Do not just stop filing without properly placing your account inactive by completing the previous mentioned form, the NCBN. Otherwise, assessments of periods could take place. Please make sure you contact the department by phone or visit a local service center if assistance is needed. Each employer should have only one withholding identification number. Even though you have several operations, you may file a single report for your total payroll. If, however, you operate distinct businesses and maintain completely separate payrolls, you may register for an ID number for each. If you register each business, you must file separate reports for each business, including separate annual reconciliations at the end of the year. For further information concerning this, you can refer to the 2024 NC30 on page 4. Now, for general recommendations, at the department, we do recommend that records should be maintained for a period of time. Keep withholding records for 10 years. This includes employee information, withholding allowance certificates, W-2s, 1099s. Also, in order to research this further, you can look at Session Law 2020-58. There is an added exception to the general statute of limitations for proposing an assessment for failure to pay trust taxes. If a taxpayer collects North Carolina withholding taxes but fails to remit all collected taxes when due, the department may propose an assessment 10 years after the due date of the return or 10 years after the return was filed, whichever is later. Consequently, the department recommends that a taxpayer should retain their payroll records for at least 10 years after the last filing of all required reports for a calendar year or the last payment of any amount due for the calendar year, whichever is later. There are a couple of important reminders that I would like to share with you today. We want to make sure that you recognize that withholding tax is a trust tax. Register for a withholding ID number if you're going to have employees to withhold on. Utilize our e-file and online payment options to submit a payment return. We also want to remind you to file a withholding return when due, even if there is no withholding tax due. And last but not least, we want to remind you to visit our website for additional information. If you need to ever contact us for personal tax matters or business tax matters, you have various ways to get in contact with us. You are going to want to call or visit your local service center and or contact center. You can call us at 1-877-252-3052 between the hours of 7 a.m. and 4:30 p.m. Monday through Friday. Most service centers are open to the public for walk-in traffic on a limited schedule. Appointments are recommended and walk-ins are first come, first served. Walk-ins and appointment information are on our website at www.ncdor.gov. The Department of Revenue works with the IRS to provide pertinent information that applies to both agencies. One of our partnered documents is the Small Business Calendar. This is posted on our website on our Just for Small Business page. The calendar, produced in conjunction with the Internal Revenue Service, aims to help small businesses keep up with important reporting dates for the Internal Revenue Service as well as the North Carolina Department of Revenue. Refer to your resource document guide that was shared with you at the beginning of the presentation for the link to this calendar. As mentioned throughout the presentation, tax laws rates are subject to change. To stay up to date with tax changes that impact you or your business, we encourage you to subscribe to e-alerts. Taxpayers may sign up for tax alerts or emailed alerts. The path to that is www.ncdor.gov, contact us, then e-alerts. Once you're there, click subscribe and you're well on your way. In addition to e-alerts, we also encourage you to follow us on our various social media pages that are listed at the bottom of the slide. To assist in maintaining compliance, the department posts guidance on the NCDOR website pertaining to different tax laws administered by the department. Our tax bulletins are a form of written guidance on tax laws issued by a division in tax administration every year. A directive is a form of written guidance on the tax laws issued by a division in tax administration. A notice is an announcement of a change in tax law or other important information. The notices and directives are usually published as changes occur. Another resource is the Personal Tax Bulletin. It is published online and reflects changes made to the 2023 regular session of our North Carolina General Assembly. This document has information to assist taxpayers with personal tax information as well as withholding tax information. In today's presentation, we covered a highlighted overview of the withholding tax type. In order for you to register to attend other webinars to learn much more, remember to visit our customer education page and access the webinars we offer. We also offer webinars in Spanish. If you know someone that can benefit from this webinar, please share our information with them. We now have the Tax Resource Library, which houses the tax law updates, e-modules, and outreach e-learning. We encourage you to scan our QR code here and come and enjoy a plethora of other presentations that we offer. In addition to webinars, we want to make you aware of on-demand resources we have on the website. The on-demand educational resources discussed during this webinar are located on our website and YouTube channel. We have several YouTube videos and our tax resource library. This concludes our presentation for today. We want to thank you for attending. Please take time to complete our survey in the chat before you leave. And again, we have here our QR code that is available for you to scan so that you can see what other webinars we offer so that you can gain more knowledge. Again, thank you, and we look forward to seeing you again.